Hey guys.
Hello. And we're live.
All good? Or I don't know.
Yes, we're live.
I'm not sure if Zanko is here. I haven't heard him
I don't
speak
know.
yet.
Yeah, also I know Zanko Gary.
Can you hear me?
Okay. Well, wait. Maybe he has some problems.
Can you hear me now?
Yes.
Yes. Now we can.
Okay, sorry about that. So we're live.
Oh, well, live. Okay.
Right.
So.
Okay, let me know the link so I can hop over there.
It's in the chat.
Oh, I think I was coming later. I don't see it.
Yeah, I also don't see the links. It doesn't show the history.
Wrong chat. Okay. Okay, I'll be over there and let you guys know in case anything is up.
Okay, Brian. You go ahead.
Are we officially live, or do we need a quick countdown, Sanko?
We are live.
We're live. All right.
Yeah. So our visitors can see that we're very authentic guys. Don't know what we're doing.
Yeah, it's all good. All right, I'm going to kick this off here. Welcome, everyone, to our This Week in Crypto call. here on May 15th, 2020. I'm joined by Balance Maxim, our founder, Gary, and Senko. We'll also be having a special guest, our friend Bagsy, who's been with Santiment for about a month now. He'll be joining and possibly adding a little bit of commentary toward the end of the call. For anyone who is interested in any of the models or templates or graphs or various other insights that we share during this call, please let us know afterwards and we'll be more than happy to guide you as to where to go. As for sand sheets models, things of that nature, you can send any of us a DM or join us in the Discord channel in general and just let us know that you're interested in checking out a model and we'll be more than happy to give you access. And we're officially past the 2-month mark of Black Thursday now, and obviously prices are looking very different. We were at one point at about 3,700 at a low point for the year, and then we hit above 10,000. Now we're back in the mid 9,000. So as is the norm for crypto markets, things are all over the place all the time, and we're looking forward to getting into it. I'm going to hand the floor off to Maxim here, and he's going to kick it off with some of his insights, and then I'll be jumping back in.
Okay, thank you, Brian. Let me share screen, and I go directly. So, I think we even named the topic for the day, to B2C or not to B2C. And yeah, after the halving event, which was kind of by some market participants believed it's not priced in, or not everything, all risk removed. You can see that quite some players positioned in advance, as it's like dormant tokens. Token H consume, which shows the spikes, shows volume, but taking into account how all the tokens have been moved. You see, on that day, volume was a kind of high, but not as high as you see in this chart, which will tell you the story. Okay, a lot of dormant tokens have moved. They were positioned in front of. Now, after it's over, what is the situation? What are the metrics telling us if we look at Bitcoin only? And honestly, and I believe, yeah, we have to be honest. If looking just in Bitcoin metrics, be it transaction, token H consume, activity, or social volume, and we have a bunch of others. Whoever told you that there is something clear on Bitcoin metrics, maybe this person is lying. Yeah? There is nothing clear on these metrics. They're kind of in a stage where, well, it's undecisive. Yeah, it's peaked and went down, and it's peaked and went down, and direct phases is normal. There is nothing, or like if I even go through all other more esoteric metrics, spend coin cost or token holder structure, exchange flow here and there will be nothing. Does it mean we cannot say anything? Nope. We can say quite a few things. And for this, we go to some other metrics. Now, we need to be creative to understand what's going on. Now, this chart show correlation between Bitcoin and S&P. And by the way, charts I'm sharing today, they're all on our Sun-based platform. And if you want to compare, like having Bitcoin price, just press a button compare. Here you select SPX price, and here you go. You can see correlation. It's a good feature. You cannot find it so easily, but now you know how to find it. And the chart tells the story. It's decoupling. Yeah, it's decoupling. It was initially Bitcoin was recovering a little bit faster, then S&P was catching up, then they've been moving together. Now Bitcoin is pushing more easily and more volatile than S&P, and I think this is a sign the risk or the risk money are back, and they're back in a good amount. And as we said once in our research, we've seen quite a few times in the past, Bitcoin start decoupling and rising before the market after some crashes. And we believe in the case of COVID, it will be even stronger the case, because you cannot recover the whole S&P or Dow Jones or DAX if you're in Germany as easily as Bitcoin. It's a whole economy, and the whole economy is in big troubles. Some areas are good, like Amazon or Tesla. Their prices also increased a lot, but some others are in really, really deep shit or deep troubles. Sorry. And as S&P represents the whole economy, it will not be as easy. And Bitcoin is easier, or even easier like Ethereum. And we will look now into some other things which are even more easy. Risk money are here, they're pushing stuff around, and they will play market now intensively. They're hungry, the smart players are hungry, and I bet we will see even more volatile and a lot of liquidations on Bitmex and all these things. So, but once we see on a general scale, Bitcoin is decoupling from S&P, it's the first sign we need to pay attention to. And Brian, I remember you also had something in this regards. You want to share something?
Yeah, Max, and while we're looking at your screen here, it's pretty notable to see that the separation really began to occur right around April 28th or 29th. And that's when we saw Bitcoin sort of shoot all the way up to about 9K, I believe, 8,800, there it is.
Yep.
And the S&P kind of stayed flat. And this was right around the time that the Fed, at least here in the US, from what I'm familiar with, the Fed did the last of its real tinkering with the overall supply of the amount of dollars that are in circulation right now. They were no longer able to push up any stock prices rates. For those who remember, it was up around 1.5%, which is the norm, 1 to 1.5%, and they gradually started taking off a half percentage over a couple rounds until there were no longer any interest rates that companies had to pay. And at that point, the stocks could no longer really rebound because, as most investors in the traditional markets know, most companies are not generating revenue right now the way they normally are. Even those that don't really rely so much on face-to-face interaction are getting hurt right now due to the pandemic going on. And the Fed had been lifting up the price of the S&P knowingly because they were able to scrape off a lot of those interest rates. Now they were no longer able to, and we're going on close to 3 weeks now of the Fed really not being able to do much. And that's why the S&P has kind of flattened out, and a lot of people are kind of surprised it hasn't quite dropped, all the way back down to where it was in mid-March when the drop first happened. But in the meantime, cryptocurrency is able to kind of lift off the ground here because they don't rely on actual revenues or debt to equity ratios or PE ratios. And they were able to scrape above 10,000 before now being around 9,500. But overall, the correlation is really starting to drop down, and we're seeing some positive news. When I share my screen, I'll actually show what the correlation graph looks like. But overall, this looks really good. And when correlation is down, that's a sign that things at least are not bearish. It can be neutral, but when correlations are down, it usually means it's either neutral or bullish. And we're in a good position now, in my opinion.
Yeah. For me, it was just as simple as that. There are always risk money now with Fed and central bank in Europe and everywhere printing even more easy money. Well, yeah, they will flow into something which people believe, okay, it has value because the value of fiat money, be it dollar, euro, or others are being destroyed now, removed gradually more and more. So people having money, they will put it somewhere. So there are some stocks like Amazon and Tesla, which I just mentioned because everyone knows them. There are others too, which of value people put there. And there is this risky, interesting game with crypto, which is easy. Once you establish that, it's easy to play. So quite some amount of money flows here too.
Agreed.
But it's a first sign. It's a first sign when it's a decoupling. And the next one, even though Bitcoin kind of not yet recovered from a pre-COVID top, we have a lot of projects, altcoins, which did in a quite impressive way. And once you see it more and more amount of coins breaking the previous tops, let me see 0x for instance. Yeah, 0x did it recently. I think when was it? When the break? Okay, maybe somewhere here, 8th of May, and Cryptonium. How to call it? Creep. Gary. Cryptonium.
CRET.
This one?
Yes.
That's it.
Cryptonium, yeah, also broke it, and then Numerai. All of them broke the tops. So what you see, if the generals are still kind of slow, in generals I mean Bitcoin, Ethereum, but the army and soldiers already in the field fighting for investors' money, attracting more risky money. And we could bet it's a question of time till we break the pre-COVID tops. Yeah, we don't know what will happen thereafter. It will go all the way up to 2025, or it will correct back to, I don't know, 4, 5, 6,000. It's an open question, but we will see once if it happens. We can measure crowd mood and see are they still reasonable or are they becoming irrational again. We could bet it's a question of time, 50 or 200,000. If it will be the consensus, we will issue sell signal. Anyway, we wanted to talk a bit or show some metrics for the smaller coins, yeah, and they, some of them are being pumped or have been pumped by famous Palm Beach research. Cryptarium is one of them, but nevertheless, they show dedicated effort of smart insider money for flowing into altcoins after Bitcoin moved long enough, because they know the mood has changed. It's possible now to pump. There will be enough retail jumping into it. If you are one of those retailers, be careful. This game is a tricky game. Doesn't mean you shouldn't participate, but just know, maybe check the metrics, like what we're sharing right now. Cryptarium, you will see when you see this kind of divergences that the prices is spiking and there is extreme activity, but then with the new top, this activity is not matched anymore. You should expect an extended amount of time correction or even go even lower. Yeah, and it's a very classic pattern we've seen so many times. You see it on directive addresses, you see it in transaction volumes, yeah, directive deposits. Everywhere it shows the signs. And if you are one of holders or consider to be holders of one of the small alts pumping, yeah, just know your game, because there are big money playing this game. Try to be as them, not try to be here as the rest of the crowd who just learned, oh wow, it was a pump, a new high. But you see that the most activity already took place. And if yes.
Just to clarify on what you just mentioned, because I think it's really important. For daily active addresses, which is what we're looking at now, as well as social volume and transaction volume, we can see similar patterns where as prices climb, in order for them to maintain the momentum that they're on, we need to see the bars individually of these daily active addresses, transaction volume, or social volumes bars continue to climb along with it. And if they go inversely, as we see in this great example, that's when it's a clear sign that a top is forming, correct?
Correct, yeah. Because you need new participants, new blood to buy
exactly.
Yeah.
And the same goes the other direction too. If prices are falling
correct.
and bars are climbing, that's a sign that that direction is being maintained by the crowd. But if the bars start to drop off in either direction, that means a move in direction is imminent, as I understand.
That's correct. That's correct. I think we used it last time for Ethereum.
Yeah, absolutely.
Yeah. So the learning here, we will see more of this kind of alt. But if you're tempted, you're in a Bitcoin Ethereum, maybe it's more interesting now to wait till they break the tops, because it is likely event. Yeah, it's by no means given, or we don't know especially time, but it's very likely event. Yeah, the army is already in the field. Army of risk, smart investors, sharks. They are doing their work already. So but the good is we're not eaten by the sharks. I think maybe from my side, that's it for today. As I said, all these charts can be accessed on the Santiment platform. And after we finished and we compiled the video, we put the links with kind of chart layouts going directly to some of them, like Bitcoin, maybe 0x and Numerai. It's good known projects. So you can revisit and see it for yourself. Maybe Brian, you take it from now. You can take.
Yeah, you bet.
Sharing.
Great stuff, Maxim. Thanks for sharing.
Yes, welcome.
And Bagsy should be jumping in here any minute. He just sent me a little message. So go ahead and unshare your screen and I'll share mine.
Okay, then I need to go first, I think, here, and then try Gabriel, and then, yeah, you're on.
All right. Okay. So to start out, I want to recap what Maxim was saying about the S&P and its correlation to Bitcoin. And I think I just heard Bagsy try and enter if someone could admit him.
I let him in, yeah.
Perfecto. Okay, so what we're looking at now is a rolling correlation of Bitcoin's actual correlation to the S&P and the price of the actual Bitcoin right here. So interestingly, you can see a trend anytime Bitcoin's correlation begins to turn actual negative and the actual price. When we see things moving up high, that actually can be kind of a bad thing. And that means that it tends to have a correlation with the S&P, and the S&P is almost holding back crypto in that case. So things actually tend to move along best when the correlation is below this dotted red line, which is coincidentally exactly where things hover on average. For those who believe that the S&P and Bitcoin have no correlation, they'd be correct. If they think it has an inverse correlation, that's not correct at all, because it's rarely down here. And that actually means that the price of Bitcoin and the price of S&P are going in opposite directions. And inversely, when things are really high, that means that the S&P and Bitcoin are moving in the same direction. And for those of you who remember a couple of months ago, we were making frequent posts about how the S&P and Bitcoin were at all-time high correlations, as this point was just a little bit above the previous all-time high that happened in the summer of 2016. Sure enough, when that happened, Bitcoin falling, that was a sign that the correlation was extremely high. And over the past few months, we've kind of seen a bit of a fluctuation. We had a bit of a fake out, followed by a jump when the S&P actually coincidentally went the same upward direction of Bitcoin. But now the S&P has sort of fallen back down, while Bitcoin has sort of maintained a neutral momentum. And that's why the correlation is starting to fall back down to about the 0.25, 0.3 range after being up above 0.6 here. So once we get down to zero, that's a really good sign that the markets are able to work independently from the traditional markets. And I would anticipate that's going to be a great sign, sort of like a pseudo golden cross, that Bitcoin can start to really churn along into the the 5 figures and beyond. So really interesting. And for those who are interested, we had one of our SandFam members write a short article called BTC is decoupling from the S&P, and I highly recommend people check it out. It was just released yesterday, so every piece of information is very relevant in it. All right. So moving on. Yeah.
So what you're telling me is we're all going to get rich if that thing touches the red line.
God, if only it were that simple, right?
Right. Good morning, guys.
Hey, Bagsy. So yeah, obviously this is one indicator out of many. You don't want to just purely rely on the fact that Bitcoin and the S&P are not correlated to presume that Bitcoin is able to churn along all of a sudden. But in general, Bitcoin rests on this red dotted line overall if you zoom out over its 10, 11-year history. And anytime we're above, that generally means that it has the ability to fall into a bear market. And when it's below, that's generally the most positive sign. As you can see here, when things really started to kick off, obviously it's hard to see because this chart is parabolic, but generally when things fall this low, Bitcoin is able to go high. That's how we've seen it. This was a really good sign here in what was this? Yeah, this was May of last year. So just about 1 year ago is when it really fell below and prices really rocketed up. I think right around 13.5 was the high. Some exchanges had it close to 14. But yeah, there is definitely a correlation between the actual correlation going below zero and Bitcoin being able to make a run. So moving on, we're going to jump into what the top 100 blockchains have done over the past 3 days, 30 days, and 90 days. I'm actually going to start by showing you the combined returns of each of these top 100 blockchains through all 3 lenses. So it's a little tricky to see on some, but this gives a nice zoomed out macro perspective of what we've seen over the last 3. That should actually say 30, apologies for that, and 90 days. In general, most 90-day returns are still in the red, and that's due to a little thing called Black Thursday, which most of you notoriously remember was not a great time, and crypto markets were panicking like crazy. And sure enough, I'd call this about 75% to 80% of the top 100 are still in the red, maybe even a little bit higher, around 85% of them. Then you have a few that have been able to surge since. Hyperion, this was Numerate, as Maxim just showed, and then BHEX token, yeah. And then also, what was this? Streamer Data Coin. So in general, these are very far and few between. There are not many of these. Most, such as Bitcoin, are in the red, and Bitcoin is actually one of the better returns over the past 90 days, only down about 3.3%. And earlier this week, when it was up above 10K, it was actually in the positive for the first time on the 90-day scale. So interesting to see that most coins still have not recovered, and it's important to remember despite this big run up over the last couple of months, most projects are still in the red since being more or less crushed by the big retracement that was historically the biggest we've ever seen on a single day. So I highly recommend checking this from time to time. It doesn't auto update, so it's best if you just DM us in the general channel on Discord, or on DM us on Twitter, and we'll get this updated for you, because we really like that people are using this and getting some actual usage out of this kind of view of the crypto market top 100 and what the prices are doing. Moving over to, yeah.
If I can add,
Of course.
that's actually really cool. And one thing I'd recommend to people, if you are trading altcoins, right? If you look back, a lot of these coins are correlated to one another. So more recently, for example, you'll see, I guess, there's a correlation between Tezos and Algorand, and Chainlink as well. But back in the days, there were old Bittrex coins that tend to follow each other. And if you look back into that, you might be able to get ahead on some things, because as humans, we sometimes exhibit the same behavior over a long time. So if you see red coin pumping, you might see another one move right after.
Yeah, really good point. Another one is Stellar and Ripple.
Yeah, exactly.
Yep, exactly. They tend to move along closely, and oftentimes if you see one pump while the other's flat, you can directly sell one off and buy the other, and end up sort of getting a duplicated profit, more or less, by being able to see one coin that often is followed by the other, and sort of trade off at the right time to get the benefit of both pumps individually.
Yeah, and it's a bit hard. I find it, I don't know if harder is the right word, but I don't really go off of XRP and Stellar, even though they move similarly. Like when I do trade that, I try to find really lower market cap coins, because the people moving it will get exponential gains, and it's a lot easier for them. So I tend to want to trade these correlations slightly more with lower cap coins that people don't really talk about. Just for the people listening, I find it's worth the risk to reward a bit more.
Yeah, and good point that there's a nice benefit from going off of tokens that are often under the radar are not being discussed, because as we'll show in a sec, we find the concept of social volume very important in cryptocurrency. Obviously, without PE ratios, debt to equity ratios, there's a lot of price traction that is completely dependent on actual sentiment. And when there is a very positive correlation to what people think or perceive about a project, things tend to go up, vice versa when they go down. And with smaller projects, it takes very little to be able to actually see a pump. And if a small group of people are talking about it and they think positively, you can almost see that in the charts as things begin to decouple and take full advantage of it. Whereas Bitcoin or Ethereum, they're such large tokens that it takes a lot more of a crowd effort to really take advantage of an independent pump or an independent fall, so to speak.
Yeah, really well said. And that's not to say they won't pump. Like we've seen Ripple move, thousands of %, right? But over time, it gets harder the older the bag holders are as well.
Yep.
They just have a lot of dead weight to claw through. So that's another thing to take into consideration. That's why, people have been. I've seen traders go for newer coins, but that's a whole other conversation. Sorry for interrupting there.
No, I love it. I think it's a really good point you're making. And obviously, we have a couple metrics on our platform, mean age being one of them, and MVRV being another. And what they measure is exactly what Bagsy's referring to, and that is being able to watch what some of the older versus newer bag holders are doing with their metrics. And generally, when you see a lot of those older bags being moved for the first time in a while, that can be a very classic sign that a project is starting to get moving. Even if the price hasn't moved, when you see those older bags moving, it's a great foreshadow that you can take advantage of.
Just to interrupt you, sorry for a moment. There's some commenters on our YouTube stream. So Valentin, our CTO, is watching, and he made a comment about the correlation with S&P 500. He says, keep in mind that S&P 500 has been in general bull market in the last 10 years. Now, it is the first time we are in recession, so that could change the correlation mechanics.
Yep, very true. Yeah, I mean, the correlation can go both ways. If the S&P is moving up, and Bitcoin is actually moving down, which has happened, of course, that can be a negative correlation that can actually look like it's a positive for Bitcoin when it's not. But right now, we're kind of seeing the inverse to that, where the S&P is in kind of a at least 3-month bear market, which is pretty significant, while Bitcoin has, over the past just about 2 months, has been able to kind of transform itself back into a bull market. And that's why we're seeing the correlation move down here. So I think Valentin makes a good point. When the S&P is actually moving down, it just adds the ability for the correlation of Bitcoin and S&P's correlation to begin to move down here. And that's rare, because over the past 10 years, the S&P has been just churning along without any threats like what's happening right now in the way.
And one other comment from user Ananda Kau, if I can pronounce it correctly. So they're asking what are our thoughts on the ratio between Ethereum and BTC?
The ratio between Ethereum and BTC.
In what
sense?
The price, I guess.
Oh, okay. You want to take this, Brian?
Let me.
Let's use some data.
I need to load. I need to load the chart. Actually, it's a good question. I did not look into it quite some time.
Well, technically speaking, it looks like it looks like ass, but that doesn't mean that it'll it can change very quickly.
Yeah, we can see right around the 29th is when Ethereum kind of hit its local top. It actually got to, it's not going to show it here exactly because we're a little zoomed out, but it hit about 226, and then it kind of flattened out, actually went back to about 188, 187, and now it's at about the 200 range, while Bitcoin actually continued to surge and get above 10K at one point, before dropping and now being in the mid 9,000s. So yes, right now Bitcoin is kind of being the dominant coin, not just versus Ethereum, but versus all altcoins as I've seen it. And generally, with enough time, Bitcoin will start to flatten out, and altcoins will take over, Ethereum included. But right now, I haven't seen any particular metrics that are showing that we're about to flip flop and Ethereum's about to start to make a run up on Bitcoin. Do you guys see anything differently on your side?
Isn't it kind of low? I think, I don't know if you can show the Ethereum price in terms of BTC. I think right now it's on a kind of a bottom, right?
Very close to bottom, yeah. I'm just looking to it, yeah.
Can I share a screen actually?
Yes, yes.
Great.
Yeah, please.
All right, let me just close my personal windows. Make sure nothing funky pops up. All right, present now. A window. Okay, so let me know once you guys see this stuff.
Yep, all looks good.
Okay, so this is ETH BTC since I guess since it came out. Volume, I mean, I guess you guys would know a bit more about this. So I personally see this, and it's nice to see there's volume, but I find it hard to know whether it's just because there are a lot more market participants than 2 years ago, if there's more wash trading, or if it's actual accumulation. What would you guys think? Is this even, data that can be used?
No,
This
no,
volume?
it's just more traders, I think.
Oh, okay. So
I would say more traders, more volumes, or more exchanges who claim we have billions of volumes.
Yeah,
okay.
Even though
Yeah.
I don't know if it's clean up in this data source, because they do try to clean up, but it's hard.
Yeah, sorry, I'm just playing around with this. But for me as a trader, what I really, really, really want to see, I want us to flip this level again. The reason why it's important to me is because it acted as support resistance in the past. So to me, this is probably the most significant level, and that's 0.026 roughly. So if ever, I see some type of, let's say, we take the liquidity out below here, price bounces, takes everyone's money, and then pumps. Like I'm getting in. If I see like a slow climb, then we retest it. I'll look to get in again. I got chopped up here, actually. I got stopped out. So still a bit salty about this, but truthfully speaking, out of all the altcoins, and this is just speaking for myself, like I find that Ethereum does have the most, how should I say it? It's the most legit. Things are actually built on it. They have a team, they have funding. But the one thing I think that'll really spark this is the whole Ethereum 2.0 narrative. And I say narrative because it doesn't, it's, people will be able to stake their Ethereum to get a node, which I think is 32 Ethereum, if I'm not mistaken.
Correct.
But I feel that traders are going to use that and whales to actually just pump the price. And so they had mentioned July, but Vitalik a couple days ago came out and corrected them, saying that he never heard July. Whatever. Long story short, he's looking at Q3. So to me, this is just going to keep going sideways until that comes around the corner.
Yeah, really interesting.
Yeah.
It's important to point out that we're only about 3 or 4 days out from the halving completing, and with pretty much the past 2 to 3 weeks being all about Bitcoin, people speculating as to whether things were going to surge up or move down, and then ultimately neither really happened, other than about a 10-12% retrace a couple days before the halving. We're now seeing people start to feel out the markets again and rediscover Ethereum on an overall crowd basis after it was kind of ignored in favor of Bitcoin. And that's why I think we're going to start seeing a price direction one way or the other start to form very soon. That'll be a lot more significant than this flat movement that we've seen over the past week or so.
Mm-hmm.
Yes, so I think after the Bitcoin halving, Ethereum 2.0 is the next big thing. But people should keep in mind that it's going to take some time. So phase 0, maybe it will appear this year, but usually in the past there have been delays. So originally they said July, but maybe it will be later. But to actually make it useful, you need also to deploy phase 1, phase 2. I think only when you are at phase 2 you can actually do transactions with the next version of Ethereum. Until then, it's just still like work in progress.
Vaporware. Yeah,
That's
a really good. That's a really good point, actually, Tsenko. But the thing is, as well, I'm sure we can all agree that, you know, as a developer, as a blockchain, these things are crucially important. But for price, like you'll have altcoins that haven't been in motion for 2 years that see 1,000% pump just because someone wants to move it. So for people who are listening that are trying to make money from these things, you know, unfortunately, I find that fundamentals don't really play much of a role anymore in price action and in, you know, direction. But at the same time, for longevity, you obviously want your project to have a blockchain that functions. And in order to do that, like Tsenko pointed out, you need to roll out a lot of phases. You have to do a lot of testing, and everything has to be perfect, because if there's a flaw and someone takes advantage of that, then you have a lot of angry users, like we've seen many times in the past.
For sure. Awesome.
So sorry for sidetracking, but there's questions on YouTube. So there's one other user that asked something. So Kalo Raikov asks, does anyone expect a down movement for Chainlink, correction after the long run, or the sentiment is too strong going ahead?
Jesus, I don't know what
Chainlink, expecting, if I heard that correctly, are we expecting a down move for Chainlink?
Oh, I forgot about this chart. Well, it's already in a downtrend, right? But I didn't even remember I had all this stuff. So let me clean this up a bit. Here. So right now, technically, we made a lower high, but we're still in an uptrend, right? We're following roughly. There's roughly a trend line in here. It's not perfect. Technical analysts will look at this and be like, that's not a perfect trend line, but you guys get the point. So as long as we're able to, you know, form support, it's okay if we move beneath and move back above. That's often a bear trap. So that's just to grab liquidity, so big money people can actually fill their bags, because you need people to sell to you. So sometimes they'll just sneak it beneath and pop it back up. So if we see that, like optimally, this is where I'd want to get in, or near this trend line. But long term, unless we see some type of significant drop and then a bearish retest, and we're unable to get back above the old trend, then if I were to see this, then I might change narrative. But the thing as a trader, you can look at this, but you can't predict the future. You can just give yourself a visual as to what's going on. So overall, it's in an uptrend. But to me, the most important thing that we want to look at is this trend line we're riding. But what was the question? I feel like I rambled. Sentiment too strong.
Do we expect a downtrend, or maybe the sentiment is good, so it will continue growing?
Okay, well, until proven otherwise, I'd say uptrend. Do you guys have any insights on sentiment for Binance, BNB? I've been holding it for a while now, and its performance has been really disappointing. Do you guys want to look at metrics, or would you look at a chart first?
BNB, I don't have any fundamentals I could show offhand. Why don't you start with technicals, and I'm going to do a quick dig on something I can show on the sentimental fundamental side.
Ooh, okay. I had all these charts already. Okay, so I just drew out logical support resistance levels. I like to use these just to give myself to know which side of the trade I'm taking, basically. So right now, we'll look at this level. We'll call it look here. Like right now, this is the most important line on the chart, or level, technically speaking. Like, I do not like what I'm seeing here, because this 0.0179 support level just closed beneath and retested it bearishly. This is on the weekly, so every candle is a week. Let's go on the daily. Right now, we're cleanly getting rejected, and usually what that means is that price will look for the next logical support level. And to me, that's in another 15, roughly 15%, 20%, around 0.00141. If Bitcoin were to seriously start pumping, then I could see us taking out the stops beneath. I don't even know if there are any stops here anymore, but some traders might try to long early and they'll set their stop here, and whales will just dump it, steal everyone's money, and then move it back up. So if I were to swing trade this, I would look to get in here. But if you're, if you're a long-term investor and you don't want to be perfect, you could look at this level as long-term. Binance has performed really well, but they're starting to make some mistakes, and this is just my opinion. Not talking shit about CZ.
What kind of mistakes? No, it's interesting because I had this feeling 3 months ago,
right?
When they went on buying spray.
Yes.
I was thinking, interesting. Does not look so decentralized anymore at all.
Yeah, I don't like some of the things they're doing with their products. I don't like the whole leverage token. Basically, what happened was they initially introduced some leverage tokens on their platform. So one token is worth 3x leverage position. It's basically 3x leverage, but it's marketed in such a way that you can't get liquidated, but you can. Long story short, basically CZ came out and said, we're delisting these coins, and this was from, I think, FTX.
FTX,
FTX created them. Binance partnered with FTX in some way, then took the tokens and basically, discontinued them. But then, more recently, they added another leveraged token of sorts and masked it in such a way that I don't even know how to explain it properly, but the feeling that it gave me is that, they're trying to mask every decision by protecting the user, but they're not actually protecting it. And the platform has been lagging a lot. It gets, you're not able to put orders through. And this, Binance isn't the only exchange. I do understand that Coinbase went down, others went down, but more recently, a lot of my friends who scalp trade on the platform have been complaining. So not only from the standpoint that I don't really like or agree with some of the decisions that CZ made, the platform's also kind of not operating properly. Plus, you don't even have a market stop order. Like, what is this? Anyways.
True.
So what do you want to say? So what do you want to say, Binance now? Not only competing with Coinbase, which they're doing for some time, and of course with Bitfinex anyway. But now they're trying to compete with BitMEX too, introducing this really casino style leverage.
No.
Okay, well, if you're running so many fights in so many directions, I don't know if it's a good strategy to you. They might be overconfident. They might have become a bit overconfident. Okay, and market might punish it.
Yeah. This on the monthly, actually, I do recommend people start on the monthly. But right now, the most significant level was retested many times as resistance, but we weren't able to close above it for each candle is a month here. So next level that makes sense to me is around here, as I said. Just, visually it makes sense. That's not to say we can't bounce, right? But there's a lot of resistance to work through. So technically it doesn't look good. And that's just like personal. Well, technically it doesn't look good, but from a company standpoint, I don't find it looks good either.
Cool.
Okay, so I think actually
got-
oh, do we have some more questions?
Well, are there any big topics that you wanted to cover? Because there are some questions from about other big exchange tokens. What do you think about them? And also, is burning of BNB a positive indicator in the long term?
Do you want to take this, Brian? I feel like I've been talking.
I didn't catch the last question, Senko. What
I
was the last?
I can shortly comment. The burning of BNB is priced in to the on the upside. So whenever they cannot do more from what market is expecting them to do, they could do less because they know the schedule, they know the revenue, unless they triple their revenue even more, which is theoretically possible. But this is only upside they can get more burning. But generally, I think burning is priced in. It's known. It's nothing new, and it's been going on for more than 2 years, I think, already. So there is no upside interest there. But it can be, of course, somewhere else. It's like what you Baxi says. I think it has merit, especially long term. Once you start fighting too many fights, it's just a question of time. You will start losing these battles. But it may take some time. Like in the Second World War, or Germany was fighting for how many years, even though it was already kind of lost war. So, and here they can still keep growing, or coin can recover. Just eventually it will take over this kind of too ambitious decisions. Yeah.
I like it. So all these coins are basically different countries in World War II.
Well, I didn't say that.
There's actually
a lot of casualties, at least, yeah.
There's one of the better looking exchange token charts is FTX, but that's just from a technical standpoint, and obviously I like them more. But and I do have a bag, obviously, but that's the thing I said earlier too. When you take older coins, there are a lot more bag holders as well. So
yep,
something else to consider for if you're investing in any exchange token. Plus, market cap's very important. So yeah.
Yep. Market cap, obviously very important to look at in terms of the amount of liquidity and the amount of volume that will actually impact the price and make a difference quickly. So, Bitcoin, Ethereum, you put in a lot of volume, doesn't really matter because the market cap is so big. But if you go outside of the top 100 or so, it's a much different story. What you guys are looking at here really quick is an improved look at our price versus daily active address divergence model. And what I've basically done is make a bunch of different individual charts for some of the top coins that we track and are often mentioned. And since we have questions about BNB and Link, I wanted to show from this perspective exactly how their prices are doing versus the amount of daily active addresses that are actually transacting on their respective networks over the past few days. Right now, we're looking at a macro perspective of all of these different coins and how their past 3 days specifically are going. So if I'll leave it as is, but BNB here is actually just slightly above right now. And above means that there's a slight bearish divergence between the amount that is being transacted and the actual price movement of it. And then Link is right here, and it's almost in the exact same position. And if I go to their individual charts, you can see That green is the bullish divergences, red are the bearish divergences, and we're almost smack dab even. And this is basically what we're saying. We're just about 2.75% above the actual expected line for what price should be doing. So more or less, this confirms that we're about where we should be in terms of price movement on a daily active address perspective. And then going to link, it should look just about the same, which it is. We just have a very slight bearish divergence. But if we look at something like Bitcoin, it's a little more bearish. And obviously, this is probably the single most important chart to look at on this model, because it's going to control where the rest of the markets go. If things get too bearish, we're going to start seeing the price head down with enough period of time. As you can see, it was mostly bullish in mid-April to early May, and that allowed prices to move. And as we started to see the red bars here, that's where the top kind of started to form and really started to sink down. Obviously, through this noise, anything can happen. But when the bars get extreme, for Bitcoin, that's usually at about 0.25 to 0.28. That's when things are really starting to become significant. And then looking over at Ethereum, it's more on the slightly bearish perspective, but you can see throughout the past month, it's been almost all slightly bearish divergences, which if you were tracking this, you may have been able to take advantage by realizing that a top was imminent. Because when you see mostly red like this, it's a telltale sign that the amount of unique addresses transacting on a network is not keeping up with the upward price movement that is happening for an asset. So that's really interesting to see here. And then I also wanted to show how many different coins look. I'm going to zoom in just a little quick, because this is a model for MVRV long short difference, which is a measurement of the amount of people overall that are above or underwater with their particular investment. And this combines both the people who've been in for more than a year, and then people who are more recently on the 1 week or 1 month time scale as far as their time invested in the market. Right now, if we look over here, there are only 2 tokens that are above water on this graph, and that is Kyber Network and Chainlink, which for most of you who remember right before the big Black Thursday fallout, they were the 2 tokens that were really dominating the chatter and getting a lot of significant surges week in and week out. And that allowed a lot of their investors to enter profitable territory, whereas other investors were essentially underwater during this entire stretch. And you can go all the way back to about mid-March, when Bitcoin and a lot of other projects were starting to sink below the average line of profitability for investors, whereas Chainlink and Kyber were in the green for probably, I mean, going back here, I think it was right around January that they both entered the positives. And that's still the case. So Chainlink's MVRV long short diff right now is at 13.3. Kyber's way up at 32. Bitcoin is at negative 10.5. So generally from a long-term perspective, Bitcoin is still looking like it's a buy, because the average investor is below 0. And almost every asset is going to hover around 0 here for a long enough time period. So from this perspective, Chainlink is looking like one that is a little overbought in terms of the amount of traders that are in the green right now. And because all assets naturally are going to curve down to 0 at some point, Chainlink is looking like one that has a bit of an overbought signal here. Now, keep in mind, this is long term, so this isn't meaning that in the next few days things are going to fall off. But over time, you'll probably notice a few fake outs that are going to cause some investors to drop off too soon or buy in right before a big drop, and that's going to allow Chainlink to go back to 0 here. So that should help answer questions regarding Chainlink, and over on the daily active address side, both Chainlink and BNB. And with the final 2 minutes here, if anyone else has some final thoughts on the markets, what we may see upcoming, please grab the floor.
Well, personally, I'm bullish at the moment. We've been in a steady uptrend. When we corrected down to 8.1, 8.2 the other day, you know, a lot of people were freaking out. And if we look from how we've moved since March till now, we've done a pretty significant uptrend from 3.8K. That's, you know, close to $7,000 move. So just to see a pullback like that is absolutely normal. For people who use Fibonacci retracements, that was the 0.236 retracement level, which is absolutely fine in an uptrend if you're looking at the higher time frame. So until we lose, let's say, the 7K region, I think we could definitely move down to get there, to create support down there. But I'm bullish until we lose 7K, and if that were to happen, then I'd be worried for the long term. What do you guys think?
Mm-hmm. Yeah, I personally don't believe that we will retrace 7K at least anytime soon. I think we're closer to our natural sentimental price as an overall community market right now. I think we've more or less ended our FUD related to this pandemic, even though we're still very much in the thick of things. And we're more toward our natural price again. That being said, we have surged, you know, over 100% over the past 2 months after our retracement down to the high 3,000s. So this natural pullback was bound to happen at some point. Right now, the sentiment for Bitcoin is at close to all-time high levels right now in terms of positive versus negative keywords that we track on our platform. And that tells me that that's going to be corrected at some point. Generally, when we're at this high of a level and have a unified perspective of Bitcoin being bullish, it means that a lot of people are going to be faked out. It doesn't mean it's going to happen immediately, but at some point, as we start to trend upward a little more, which I agree with you, I think that's going to happen in the shorter to medium term time frame. We'll probably see a big correction at some point that's going to push out the weaker hands before continuing upward on the latter half of this year.
Good stuff.
Anyone else? Maxim, Senko, Gary?
Just to repeat, because Baxi, you joined after I finished some deep line fundamentals like decoupling.
Oh, I missed out
a bit. Decoupling from S&P and a lot of risky money pumping up different alts. It gives us two messages: money are here, and they will keep playing it. On the other side, this pumping of alts, it's quite often was also a sign of temporal top. So not be surprised if we go down, but it's a difficult situation where so many free money are done, and it's still can be moved to market relatively much simpler than classic financial markets. It's a logical. It will eventually be pumped beyond 10,000 or beyond recent tops. 10.3 it was. Yeah. It's just market will always do what we expect the least. So if we become super confident, it will go down and we will freak out. And always need to keep free cash. There will constantly be opportunities. Like it never was that there are no opportunities. There are always. And if you're not on the market yet, okay, wait. There will be again some kind of panic. It always happens.
Yep. Absolutely. And Maxim, that's a very good point. You always try to keep a little free cash. You never know when you may see another opportunity or another huge, dip down. And whether it's pandemic related or just, you know, a simple market retrace, if you're 100% in, there's really nothing you can do other than hope that things return to where they should be. So yeah, keep that in mind. All that being said, we're about 3 minutes over the hour here. We should probably wrap up. Thank you again, Bagsy, for joining us. It was great to see kind of a technical side of things, which we don't normally look at. And I love to see support levels and more of a perspective on that view that you showed. So I loved it. Thanks for joining.
Having me,
Thanks,
guys.
yeah.
Always a good time speaking with you.
You betcha. All right, guys, if you have any other questions, please feel free to DM us on our Discord or on Twitter. We're more than happy to answer them. If you want access to any of the tools we showed, we're more than happy to give them to you. Just give us your email and your Santiment Pro account, and we'll get you all hooked up. Thanks again, and we will see you guys next week for another edition.
Yeah, see you next week. Bye.
Take care, guys.
Thank you. Bye.
Ciao.